We've been very interested in the concept of making Islamic finance more wholesome. Speakers have been talking about the concept of tayyib earlier this morning, and we see this as a continuum of our thinking that leads into SDGs and the recent PRB, the UN PRB. We see this as a big opportunity for Islamic finance to move the dialogue away from the substance over form debate and to use the SDGs and PRB and PRI as a way of creating a new approach for Islamic finance and a new dynamic. UK Islamic Finance Council is the first Sharia advisory body to actually have signed up to the UN PRB, and we were recently in New York a few days ago with Charles from Gatehouse when the UN PRB was announced, and we got various partnerships with the UNDP in various areas to try and promote Islamic finance and to progress it, and in particular in relation to the SDGs. What we are currently doing, there's two things I'd just like to talk about. We are working on a research project that is looking at the SDGs in particular and how they interrelate with Islamic finance. And the aim of this research project is, as we always do, is to try and focus on practical outcomes that can help the Islamic finance sector to develop. But I think one thing that's come out is perhaps a more nuanced approach needs to be taken when you're talking about how much support there is for SDGs. I think it depends really on which part of the world that you're looking at. Clearly some parts of the world have taken on the SDGs and the ESG environment to a greater degree than other countries. So having sweeping sort of statements that the world has taken on board these concepts is wrong. One has to be a bit more focused in terms of geographical areas. Education has come through very clearly from the discussions we've had with various stakeholders. There's different levels of understanding of the SDGs, and probably more important, how do you take the SDGs and translate them into practical steps that an organisation can take in order to take the SDGs on board. Embedded with that, I think, is a challenge for any organisation that wants to change its culture or its basic mission statement. If you look at change management theories, there are different ways of doing this. Is it purely just from a top-down approach, or do you have to involve all of the staff involved in the project? Do you introduce systems so that, for example, if a bank executive was to turn down a project because it wasn't meeting your SDG criteria, and that means that he or she won't meet their individual annual targets, or the department that they're working for misses their target for the year, does that mean that they will be punished financially? So the whole concept of taking on board the SDGs involves a change in culture, and as I said, there are different ways and different approaches of taking this on board. Do you just limit looking at a project at the credit committee approval process and say, yes, it meets our SDG criteria and therefore we'll make the funding available? Or do you monitor that project on an ongoing basis and inbuild provisions that allow you perhaps to call an event of default and call in the financing if the borrower doesn't fulfill those SDG requirements on an ongoing basis? So these are some sort of issues that have come up, and as I said, this is an ongoing research project, and we will hopefully be issuing various thought leadership publications over the next 12 to 18 months. The second And final point, which I think Omar Sheikh has already mentioned earlier this morning, is that we have been talking to the government about setting up a Islamic finance SDG task force, which would be international in composition. And as Omar mentioned, just yesterday afternoon we got the word from the government that they will be supportive of this. And so now we're building out on that to create a task force. And the aim there is to try and collect different views and to see how, in practical terms, and again I stress that, in practical terms, how that task force can help the industry, the Islamic finance industry, progress in this area of the SDGs.
Thank you, Richard, for your presentation and putting the session into context. So some would argue there's a natural crossover between Islamic finance and the PRBs and the SDGs. I mean, as we've discussed this morning, it's not a 100% overlap, but clearly there are significant areas where there is alignment. I mean, even if I was taking a look at the SDGs again to refresh my own memory earlier today, but if you look at SDG number 1, no poverty, and Zakatul Mal, and for those of you who don't know, that's the compulsory tax payable by all Muslims on their personal net worth. That obviously goes to eradicate poverty. You look at SDG 8, decent work and economic growth. Obviously Islamic finance is linked to the real economy. So actually one again would argue that SDG 8 is fulfilled through Islamic finance. SDG 10, reducing inequality. And again, touching on the points that we were discussing this morning, if we were to adopt Musharaka and Mudaraba, more equity-based financing, it would help to reduce inequality. And obviously the main one that's been touched upon and discussed many times, SDG 13, which is climate action, and there's been a lot of discussion around green sukuk, green loans. But if you take a step back, I think the cynical side of me would say this has actually been more coincidental rather than deliberate. The fact that there's a lot of crossover between Islamic finance and SDGs and PRBs is simply because from a business point of view, it makes sense to label a green sukuk as a green sukuk because it attracts more investors and you tick a box from an SDG perspective. But maybe we should be looking at this from a different perspective and actually what it means from a CIMB point of view, from a Gatehouse point of view, from an industry point of view, and how we can actually change the agenda and drive the agenda forward. So maybe, Rafi, if we start with you and your views from a CIMB perspective, what this means to CIMB as an institution and the changes that you feel that CIMB can have and make.
Sure. So for the CIMB group, we embarked on this journey back in 2016. We wanted to define what we mean by impact. Obviously, all institutions are looking at creating positive impact. So we wanted to define it more clearly. So in 2017, we made a position statement setting out a clear vision to be ESG compliant, in addition to being Sharia compliant. And what we mean by ESG compliant is that we would ensure that we have policies in place that would eliminate or reduce negative risks and proactively increase positive impacts. Then when we look at impacts, we want to make sure that those impacts are linked to several SDGs. Obviously, 17 SDGs would be a lot at the first phase, so we have chosen 7 SDGs, and we have come up with a 3-year plan. So we had a position statement, we have come up with the policies, internal policies that would look at how we reduce negative impact and how do we increase positive impact over a period of 3 years. And we will then align those impacts to SDGs. So we have chosen 7 SDGs. Now in 2019, we are building capacity. So there are several P's. What I mean by P's is several areas that we need to look at. One is the position statement. So you make a public announcement. This is your intent. And then you must have a policy to materialize that position statement. Then you have to have the right people. So we are now at the stage of building capacity to enhance our people's understanding of the impacts that we need to reduce and also promote. And we need to have the process in place. So we now have a full process where we have process to assess the risks involved in all our financing and how do we then come up with a 3-year plan, working with the customers to reduce. So if you're a plantation company, so there would be risks like deforestation, peat soil management, labor policies, so all those risks will be identified, and we will then have a framework to measure those risks and mitigate the risk. Then you need to have the products. The products will come in terms of beefing up the positive impact. So we are now launching products. For example, we have home financing for green buildings with concessionary rate of financing to attract more buyers to buy green certified buildings. We have a favorable rate of financing for green cars, electric cars, hybrids. So you need to have focused products to build this positive impact.
And if I can come to you, obviously Gatehouse has chosen to sign up to the PRBs.
Yeah.
Could you just maybe explain the journey?
Yeah,
how the bank has
we're
gone through?
probably not as far down the path as CIMB, if I'm being honest. We are at the stage of, we felt there was significant alignment between being Sharia compliant and the principles for responsible banking. We're currently looking at the SDGs and looking at how we relate them to Gatehouse Bank and the impact, the change that we can actually have ourselves, the impact we can have as a bank through our products and services, through how the bank operates. And then obviously part of what appealed, I think, to Gatehouse of the UN programme is the fact that it builds a framework so that as we grow, we can measure and look at what impact we're having, hopefully obviously increasing the positive and decreasing the negative impact on society. And also it builds in a benchmark and also the ability to learn from others as well, because we're a relatively young bank and a relatively small bank. So from our perspective, it's about providing us with that framework to ensure that we are having the right impacts on society.
It's great to see one of the Islamic banks in the UK, one of the leading banks in Asia Pacific, embodying these principles. And obviously from what you're describing, these principles have been approved by your shareholders, have been approved by management. There's a buy-in from everybody. So maybe we could just talk about the journey you went through to get to that position, so other people in the room can say, well, how do I go and speak to my shareholders about this? How do I engage with my board about this? How do I engage with my Sharia board about this? Because you need that buy-in at all levels.
So when we started the journey in 2016, there was absolutely no buy-in. The management felt that, look, why us? Why can't other banks do it? The board was quite agnostic at the beginning. The Sharia scholars felt that, it's already been done. So we don't need to really look at beyond the Sharia compliance, because once we say it is Sharia compliant, then it's deemed as SDG proof. But what happened was the shareholders are the one. We had, we are a listed company, so we had more than 25% of our shareholding owned by large funds, particularly funds in Europe. They started asking about our ESG compliance, what is our SDG impacts. So that created the momentum. And we are also owned by a sovereign wealth fund. They also started asking, because they have something called true value cost, or true value methodology, that they will look at ROE plus minus the impact, whether negative or positive. So that gave us the momentum. And then the board bought in 2017. And then by 2018, we already had the policies. We have a dedicated team, and we are now working on the process. The process is quite tedious, because measuring impact, we have hundreds of subsectors. So if you take plantation as a segment, it probably has about 17 subsegments. From primary, the guy who's actually planting the palm oil tree, for example, all the way to the miller, all the way to the one who trade in the palm oil. So each segment has different basket of risks, and you need to have a proper methodology to assess the risk and then take the right measure to reduce the risk. So it is a long, tedious process. So what we have done, we could not possibly look at all the sectors. So we have chosen a few high-risk sectors, like primary agriculture, forestry, timber, forestry, chemicals and mining. So these are probably would lead to 60-70% of the negative impact in a developing country like Malaysia, and we are just focusing on that for the first 3 years.
What about from Gatehouse?
Yeah, from our perspective, it's been very similar. This was something that was driven very much by the executive team, but it was very much based on feedback from colleagues about what they wanted to see the bank becoming and being more responsible for. And it also echoes with what lots of our customers tell us about what they want from their bank. I think there's a growing demand from the customer ultimately that they don't just want good products and services, they want to know how the bank operates, they want transparency, they want to understand a lot more about the bank before they're willing to deposit their savings with us, take out home finance from us. I think there's a growing interest in how banks operate, and we see that as part of the reason why this is the right thing to do.
Not in our part of the world.
Yeah.
In Asia, I think it's not bottom-up driven. Customers are quite agnostic. I think it's more from the shareholders' perspective. Yeah, and we were quite fortunate because our former chairman, Dr. Sri Nazir Razak, he was very much influential in setting the direction. I think he was a game changer who led the group to basically shift towards it. So it came from top down. We have seen that it also has a huge impact to the staff. When we did engagement with the various stakeholders, including our employees, we found that the millennials are very keen to work for firms who have this positive impact, objective. So it satisfies our key stakeholder, which is our employees. It satisfies our shareholders. And I think eventually our customers will open up to this. Like what we've seen in Europe and UK, eventually the customers in ASEAN will also wake up and say, look, I want to put my money in a bank that is responsible. So I think it is going to meet various stakeholders' requirements.
My question applies to Sukuk and conventional bonds, and somewhat from a legal and commercial perspective. What is the implication legally of non-compliance if you want to do an SDG Sukuk or an SDG bond? What happens if you don't meet the social outcomes, and what is the legal implication of that? And also, how is that being interpreted as a commercial risk right now? The whole Islamic finance industry, we've had to deal with the legal Sharia non-compliance risk. Does this add an additional layer, and how is that understood?
Yeah. So, I mean, we as a firm actually have been involved in a number of green sukuk. We've done the government of Indonesia sukuk for the last 2 years. We've done the Majid Al Futtaim green sukuk. The interesting thing is that even though all these sukuk involve underlying assets, when you're looking at the green sukuk, actually all people are concerned with is the use of proceeds. What are the proceeds going to be used for? And then you have the environmental framework set out in the prospectus. Now, a breach of that environmental framework actually doesn't trigger any consequences from a legal perspective. All it means is that your green investors will exit if you breach the framework. So it has an impact on the secondary market trading. But maybe one of the things that we should be thinking about is actually when you're doing a green sukuk, it's not just the use of proceeds, it's actually what are the assets that are being used to structure the sukuk in the first place. Because again, in theory, you could use a coal-fired power station to put together a green sukuk as long as the proceeds are being used in a green way, which obviously is slightly counterintuitive. Any comments on that?
I think you answered most of it. I mean, the risk that we take, so we just launched an SDG bond for CIMB Group. The issue amount is about $680 million. It will be linked to assets that meet certain SDG requirements. As Qudeer pointed out, the risk we take is if there is some element of impact washing, the greenwashing they call it, if we inadvertently put an asset which didn't have an SDG impact. As Qudeer pointed out, it doesn't nullify the issuance, it doesn't make it a default event, but we have to disclose. So the level of disclosure differs from issuer to issuer. There's no standard or uniform disclosure. What the market, like the green bond requirements are, or SDG bond requirements are, you need to have a framework, like a Sharia framework. You need to clearly define the use of proceeds. You have to clearly define how you would categorize as an SDG asset. And then you need to look at what would you do until you invest. So the liquidity management part. And then the disclosure. Some banks have independent auditors who would look into the investment and then they will declare every year. Some don't. So it's up to the investors whether you are comfortable investing in an instrument that doesn't have a third-party verification. So market would evolve. Eventually there'll be uniformity.
So just to wrap up the session, we're a couple of minutes over, but it's definitely refreshing to hear that the UK government is putting effort behind this, and I think that's very, very positive. It's definitely refreshing to hear that one of the Islamic banks in the UK and one of the largest banks in Asia Pac is putting the purpose ahead of the profit. I think that's very refreshing, and we need more of that to drive this forward.